back into earnings. Let's talk some autos. Getting specific here ahead of Rivian earnings. Alex Coffey, the other half of Next Gen, joins us. This seems like a big report, Alex, because it had this just a massive bounce in the last 2 months. Last earnings, the market wasn't totally crazy about it, and then it took off coming into this report. So what now is the bar required to be reached by this company?
One has to wonder how much of that was just risk-on sentiment in the market. It's a pretty heavily shorted name, Oliver, even in real time. Seeing a 12.8% short interest. The high beta stuff had really been kind of leading the market alongside the mega cap tech rally. Rivian, though, even so, with its nice rally year-to-date of almost 30%, is still down almost 40% over the last 12 months, as that chart illustrates so nicely for us.
Following the different views on Tesla, several analysts have stated their opinion on the possibility of Tesla reaching all-time highs again. For instance, in a report by Cameron Tierney, a researcher with Worm Capital, and his partner Eric Markowitz, Tesla has a competitive advantage over other EV companies and automakers, majorly due to its advances in AI, technology, access to software, and a vertical integration of its supply chain. The thing is, considering the volatility of the stock market, one can never be too sure of what happens next on the stock chart. However, for seasoned investors like Tony Seba, there's always a bigger picture for investing, and this can be achieved in the long term. No doubt there are several factors that are likely to plunge or boost the price of Tesla stock, but considering the previous performance of the stock, analysts are able to make predictions even as far forward as 2030. In this video, we're going to explore the latest proof that Tesla is indeed ahead of other EV companies in the business. This is not even an exaggeration. Tesla is beating all other companies hands down.
That electric vehicles will be less expensive, and they are better cars than gas-powered vehicles. So we think they're going to take tremendous share. And even if the auto market relapses in here, which we think it could, we don't think electric vehicles will relapse. So we think the 1.8 million for this year, which was Elon said 1.8 to 2 million, they're going to have some shutdowns in the third quarter for maintenance and upgrades, and so he lowered his expectation to the lower end of that range. I think he likes to lower expectations and then beat, so I wouldn't be surprised if it's higher than that.
It's no news that Tesla is doing impressive work when it comes to innovations, but that's not even the most interesting part. The company is also striving to increase vehicle production, and this is evident in Elon Musk's car sales prediction for 2030. You see, Tesla may not have been in the auto industry for so long, but the time it has existed has shown us that it's carved a niche for itself and is doing incredibly well in its industry. Hey guys, welcome back to Tesla Tomorrow. Tony Seba, just like other Tesla bulls like Cathie Wood, has predicted that EVs will become cheaper than ICE cars, and significantly better in many ways. Now, several companies want to join the EV train, and many of them have even produced a few electric vehicles. But the problem is, these companies do not have what it takes to stay in the EV business. In a recent article shared by Tony Seba, it claimed that companies like Ford, GM, Mazda, Toyota, Volkswagen, and Jaguar are all beginning to admit that they can't make EVs at a profit, and are already beginning to give up or even begging for special consideration on green taxes designed to hurry the transition. Now, we're not saying that these companies can't join the EV revolution. It is simply that they can't produce these cars at scale, and we'll tell you the reasons for this over the course of this video. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. According to latest EV reports, Mazda and Jaguar have admitted that they're giving up on making mainstream EVs. Volkswagen is pulling out of China because its EVs aren't selling there. GM is begging for less penalties for making too many forecast ICE sales in 2027 to 2030, and Ford is cutting production rates of EVs because they're losing too much on every single sale. These are all proof, and they can't be neglected. Tesla, on the other hand, is actively pursuing its goal of producing millions of EVs per year. Its CEO Elon Musk revealed the company's goal to reach a target of 20 million electric cars produced annually by 2030. According to Musk, this goal is as a result of its desire to create a remarkable record in sustainable energy and electrification by replacing at least 1% of the over 2 billion fleets of cars and trucks in the world per year. This is a big task for Tesla, no doubt. But with its technological advancements and more gigafactories in operation, Tesla should be able to pull this off. And needless to say that an increase in Tesla's car sales will have tremendous effects on the stock price, especially if things go the way that Musk is predicting. The CEO revealed that Tesla strives to be the best on every single metric relevant to its mission when it comes to accelerating the world's transition to sustainable energy. According to him, to achieve this and to maximize impact, Tesla plans to continue increasing production volumes and the accessibility of its products. It might interest you to know that aside from the 20 million car sales target, Tesla also plans to deploy 1,500 gigawatt hours of energy storage per year. So let's say that Tesla eventually sells 15 million cars by 2030. Which is still lower than Musk's predicted value. The company's total revenue could reach $1.04 trillion if its non-automotive products can yield 15% of its car sales revenue. This could potentially send Tesla's stock price as high as $6,000 per share by 2030, if not more. This will be a perfect stock price for anyone planning to retire on the stock by 2030, although it depends on how much Tesla shares you have now. At this price, having 300 units of Tesla shares now could allow you to retire with about $2 million in 2030. And that same number of shares is worth less than $75,000 as of the time of this video. There are several factors that can cause Tesla's stock price to reach a high price in 2030, some of which analysts like Cathie Wood have factored into their Tesla predictions. First is Tesla's robo-taxi platform, an innovation which Elon Musk has said could cause Tesla stock to go high up the price chart. Musk noted that this invention will have a major impact on Tesla's growth, as the vehicle is fundamentally optimized to achieve a lowest cost per mile, and this will be cheaper than a bus ticket. Another one to consider is the Tesla bot, Optimus. Tesla has disclosed that this 5 feet 8 inches robot will help carry out mundane jobs like cooking and washing, allowing its owner to focus on more productive ventures. Musk also said that the robot will be worth more than the car business and even FSD. It's evident that Tesla's competitive edge could dominate the S&P 500 by 2030. We expect that the automaker's net income and free cash flow growth will accelerate in the coming years, with a concurrent expanding margin profile to accompany revenue growth. These are not just speculations, but the real truth about Tesla, based on facts and data. But what do you think? Let us know down below, and let us know your valuation of Tesla. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.